Welcome. Today we're going to talk about a PE ratio. What is a PE ratio, how you can use it to evaluate a stock, and how to know how much you have to pay for a company. Hi, my name is Stefan and welcome to this channel. We talk about investing and we also give you all the information how to be a better investor. We're also on a mission to get 10,000 subscribers by the end of this year, and hopefully you can join this journey and we can get this channel to as many people as we can. Now, PE ratio stands for price to earnings ratio. This video is going to have a lot of information, so make sure that you watch it 2 or 3 times and also take some notes so that you can have a better understanding of how to evaluate a company. Let me give you an example. Let's say, imagine you walk downtown, right? You have some money, you want to invest it. You walk downtown, you see this amazing candy store or whatever store you like. I like candy. So we look at this candy store. We go inside, we ask the owner, okay, how much do you make per year? The owner says, I make 100,000 in revenue per year. You say, yeah, but okay, you have all this candy, you have this chair, you have people working for you. What is your expenses? He says, okay, my expenses is $80,000 or whatever currency you want to use, 80,000, right? So then we end up with 20,000 of net earnings. Now that 20,000 is obviously not the money that you're going to pay to the guy and say, okay, here's 20,000, I want to take your company. He's going to say no, because then I'm just going to keep it. So if he had a PE of 1, you would basically give him 20,000 and he will give you the store. But he says, no, I want a multiple on my earnings per year. I will take a 10 multiple. So that's a PE of 10. So that means we take this 20,000, we multiply it by 10, we get 200,000. So you'll take 200,000, give it to the owner, and now you can get the candy store. If you have a private company, 10 is simply a good PE ratio to work on. Some companies work on 5, some companies work on 15, depending on the company itself, but that's private. Once you trade on the stock market, you have more buyers and more sellers. It's more liquid. The stock is more liquid. So that means that if a company had a PE of 10, we'll give him 200,000. We will wait for 10 years to get the money back if the company stays the same. On the stock market, generally it trades around about 15. Let me show you. This is an historical chart of the S&P 500. That is essentially an index in America trading the top 500 companies in America. So historically it traded from around about let's see, I have this thing is moved now. So let's see here, you can see had historically traded from about 212 in 1880, and now it's trading at 41 PE ratio. So that essentially means that you will have to pay 41 times what a company is worth on the stock market right now, or the whole stock market is worth. So 41. In 2008, you'll see here that it traded around about 45. So that means that a PE ratio of 45, and you know what happened in 1999 was the dot-com crash. So that that didn't work out so well. Previously, in 2008, also another crash was at 65. So at 41, it's definitely overvalued because according to Investopedia, the PE of the S&P 500 has historically ranged from 13 to 15, meaning that it was quite high at that time. So a 25 above means that it trades 25 to earnings. Now you can get PE ratios super easy. You can just go on Yahoo Finance. You can see, you just type in Yahoo Finance here. I'm using the company Coca-Cola because it's a very well-known company and I want to use the numbers because it's easy, readily available. So you just go down to summary and you go down and you see that the PE ratio of Coca-Cola is 29.34. So basically you take the earnings that that Coca-Cola makes for this year, you multiply by 29, that's how much you will pay for the entire company. Now, to work out the PE ratio for yourself, let's say you wanna do it without the help of all these sites, you will need 3 different numbers. You will need the company's earnings or net income. You will need the current stock price of the price that is trading at the stock market right now. You'll also need the shares outstanding. How many shares are on the stock market? Because in our example of this guy didn't have any shares. We we had to buy the whole company. The whole company was one share. But if he had to take his company and break it up in different categories, maybe there were two owners, so there would be two shares. So you'll buy that owner's share for 10, and the other, or there were 50-50 partners. You buy the one owner's shares for 10, and the other owner's share for 10 if you had that. So the shares, you will need the shares outstanding. Now, where can you find all this information? Easily, you go to Yahoo Finance. You can even see here. So let's go to Yahoo Finance, and you go to on the top here, and you'll see the financials. So you go on the financials, you just go down, and you see net income. You take it there. What you can also do is, if you don't want to go into the finance or look at each one individually, you just go to Yahoo Finance again, and you click on statistics. So when you get to statistics, you just come down, you see that here we have the PE ratio again. We also have, if you go down, shares outstanding. So we look at the shares outstanding. We have 4.31 billion shares outstanding. So there we have that number. The second number that we need was the net income. So we have net income was 7.75 billion, and we also need the share that it's trading at right now is $52.51. So there we have all the numbers here, and these are the numbers that we needed to get our PE ratio. Then to get the PE ratio, the formula is you take the price per share, how much the price is at the moment, was that 52.51, and you divide it by the earnings per share. Now earnings per share is very easy to find. You can just go down here, and let's go straight to summary. I have it open. Earnings per share is 179, so we slot in the 179 there, and we also can put in the 179, and we divide it by the 52, what the stock price is right now, and we get to 29.2. So we'll see, it's very easy to find the PE ratio for Coca-Cola because these numbers are in the positives. If a company is in the negative with its earnings, you can't find the PE ratio. But if you want to work out the earnings per share, you need a formula. It's called the net income. So how much did it make at the end of the year? Divide by the number of shares outstanding. The number of shares outstanding was very easy. We found it was 4.3 billion. Sorry, was 4.3 billion. We divided by the earnings. How much earnings was 7.75 billion. We get to 1.79 earnings per share, and the earnings per share were very easy to find. It was right there, 1.79. So if you find some value in this information, in this video so far, please go ahead, like, subscribe. Let's get this out to as many people as we can, for them to understand what a PE ratio is. And then if we go back here, so there we have the PE ratio of 29.2 compared to their 29.3. Some companies will be far off, but I mean, it's just a little bit. It changes daily as the stock goes up and stock goes down. So always make sure that when you look at the stock prices, and be aware of the PE ratio, because that will help you to determine the value of the stock. We have many ways to do it. We have price to book value. We have price to sales. We will take the price divided by the sales, or the expenses. Then we have price to earnings. Now this is not the only way that you can evaluate the company, but it's one of the good ways to do it. In America, the stock price is quite overvalued. Some stocks are not, but in Japan, that I've seen right now in 2021, some of the stocks are trading at 7 PE ratio. That is super low. It's lower than a private company. Yeah, so I just wanted to share this video with you, and I hope that you liked it. And yeah, please go ahead, like, subscribe, and I'll see you in the next video. Cheers, guys.